네, 월가 트레이더 버니의 미국 주식 시간입니다. 앞서서 임순재 대표님과도 이야기를 좀 나눠봤지만요. 러시아와 우크라이나 전쟁으로 인해서 전 세계적으로 지금 현재 큰 경제 상황에 영향을 미치고 있는 상황입니다. 지난 100년간 있었던 중요한 사건과 이에 따른 미국 주식 시장의 변동성에 대해서 오늘은 다뤄볼 예정이라고 하는데요. 지금 바로 만나보도록 하겠습니다.
So we have an issue right now with Russia and Ukraine and the instability that that's going to cause globally, for sure within those countries, but globally also, and that's a very much of a concern to us. Well, let's go back and look at how things turn out, generally speaking. There are crises that impact the world and the United States in particular, and then there are other crises that don't impact directly the world. Indirectly they do, but not directly. Like, say, for example, World War II, the Vietnam War impacted the United States directly. World War II impacted the United States and globally. When we look at 9/11, that was a significant impact to the United States, but it also had a big impact around the world. So let's look at what's going on with Russia and Ukraine and figure that out and think about what should or what has happened in other global crises that we've had right now. And not all of them are war-based, but let's just identify the crises as a crisis where we're completely concerned about what's going on. And it's an exogenous event. So many of these occurrences also are accompanied by markets and economies that are slowing down, not necessarily just on the steady up pace. So we can have it where we've gotten it in a slowdown, we can have it where we've gone up. And some of these crises, say for example, the 1987 stock market decline where we went down 25% in one day. We can look at the crash in 1929. We can look at all these other events and we can identify if you buy during the middle of the crash or the onset of the crash, how do you do, generally speaking? So I put together some examples here and we can look at what happened. In the Vietnam War back in 1964, if you bought the market down here at the onset of the invasion, it was a really great buy. Now, the Vietnam War was a very costly, terrible occurrence for us in terms of what we tried to do, and we got very little out of it because the outside factors were so strong and the people that we were fighting were so entrenched. But still, let's just think about the invasion. If you buy the invasion versus sell the invasion, how well do you do? Well, Vietnam War was good. We look at the Gulf War, the same thing when we had the invasion there. We look at the Afghanistan war back in 2000. Now, what we have there in late 2001, we also were accompanied at that point in time by the dot-com bubble crashing. So the dot-com stocks made their highs, and the technology stocks made their highs in 1999, and for 2000 and 2001, they retraced 80% of where they were, and it's even into the indexes, the NASDAQ index, where it was at the highs in 1999 versus where it was in the lows. But at the same time, you were able to participate. It would be better to buy during the onset of a crisis than sell. Let's look at a couple more examples. The Iraq War, same thing. We were able to buy down here. So we looked at the Crimean War also. Now, that was a much more concentrated area. It didn't affect globally what goes on, but we were all very concerned when Russia invaded Crimea. And those opportunities have been places that you don't want to sell, you'd rather buy. Whether they go up and up and up, that's a different story. So let's look at the next chart. These are 5 examples. Now, what we did here was we took a look at the last 100 and some odd years of all the different crises. Now, there's a lot of information on this chart, but what we really think about is that what happened at the reaction and what happened 22, 63, 126, and 253 days out. So what happened 1 quarter, 2 quarters, 3 fiscal quarters, and 1 year out? What happened? And we've got the Gorbachev coup, we've got the Asian stock market crisis in 1997, which started in Thailand. We've got the World Trade Center. We've got the Iraq War. We've got the Lehman Brothers collapse. We've got all sorts. We've got John Kennedy assassination. We've got Dwight Eisenhower's heart attack. He was the president before John Kennedy. We've got the Arab oil embargo. President Nixon in the United States resigned. So what we did was we put together all this. Now, the point of it all is that on average, and we have had significant moves, COVID is in here with a 30% market decline, but on average, the market decline was 7%. Okay, that's great. On average, 1 quarter out, the market was 4% higher. On average, 2 quarters out, 6 months later, the market was 6% higher. On average, 3 quarters out, the market was 10% higher. And on average, 1 year out, the market was 15% higher. So that's a fairly significant observation, I think, collecting a lot of information. Now, you have to look at this within the construct of what's going on economically, what's going on. Is the Fed raising rates, not raising rates? All the other things that were going. Are we having a recession at the time? Are we having an economic expansion? But what we found is that if you sell into periods of global economic crises, those are problems. You'd rather be a buyer in there and being able to look for those for buy opportunities, particularly when we can associate it with low levels of liquidity like we are seeing right now, very low levels of market liquidity. At the same time, we're very concerned about the Russia-Ukraine problem. So let's look at one more chart. What we found is, if you go back and you go back to 1928, right before the Great Depression, we had on average about 3.5 times a year the market declined 5%. On average, if it declines more than 5%, the median, the middle, is 10%. Okay? The chances of it being a 5% decline rolling to a 10% decline are only 30%. So 70% of the time, 5% is the farthest decline we go. But 30% of the time, it continues on. If you bought it, okay, you don't necessarily make great money out 6 months or a year because it can just be in a choppy mode. Okay, you're not really getting much very attractive prices. But if it rolls to a 10% correction, okay, now that occurs only about once a year. Okay, the average decline, peak to trough, is about 100 days. And the average, or the median, if it goes more than 10%, the median is 20. Now, the interesting thing is the chances of it going to 15% if it went to 10 are significant. It now goes almost to 50%. So 55% of the time you can buy a 10% decline, you're great. 45% of the time it continues to roll to 15%. But if you bought that 10% decline, even if it rolled out, okay, you still make good money, okay, from the last time it went down, and then you look at where that is. So the average 6-month return and the average 12-month return is not that much. This is after the peak. Okay, so when we think about this, what we want to see is a market that stops going down, okay, and starts to have a better performance afterwards. Now we go into the severe correction, and we have 45 of those that go down 15% or more. Okay, that is the mean decline now is about 28%. okay? And the chances of it going to a bear market once here are 58% of the time, so a little more than half of the time. But these are good opportunities in here if we think about it. If we've been able to wait to here, great. Now, I'm not saying, I'm just saying what happens. And what happens is the number of occurrences at a bear market is 26 of them. So what we're talking about is once out of every 3 years, the market does go down 20%. That's something that we have to be able to think about. What we see right now, because we've got such a concentration of stocks in the indices that are so big, the Googles, the Apples, the Amazons, is that we think about this that's much bigger than it's ever been before. So let's not just think about the indices. Let's think about the average stock. And the average stock is definitely down. When we look at the NASDAQ composite, the average stock is definitely down 20% this year. So we are into that bear market window when we look at the average stock. We're not into that when we look at the indices. But I think it's interesting to look at the average stocks because the concentration within the industries, in indexes, are so different now than they have been before.
네, 버니의 미국 주식 같은 경우는 서울경제TV 유튜브에서 다시 보실 수 있고요. 노란톡도 열어둘 예정이니까 이쪽으로 참여 많이 부탁드리도록 하겠습니다.